Welcome to Student Saturdays. So today's content was obviously shot on Thursday when we were reviewing Technical Thursdays. But on today's content, we really want the student, Judo King, to go over what I just went over. And the reason I want him to do this and teach us this is because as a student, if you cannot teach something, you did not learn it properly. Does that make sense? Mm-hmm. And I feel like that's the biggest thing, that when people are teaching someone in this industry, they're like, hey, did you get it? And they're like, yeah, I understood it. Perfect. Let's move on to the next thing. With me and you, it's going to be completely different. After I'm done teaching you, I want you to go back into the market and look for the exact same example so you could then teach me.
Okay.
Right? Because when you teach someone how to do something, you learn in a completely different way. Mm-hmm. Think about it like judo. Someone's going to teach you how to do an ogoshi, a hip throw. It's very different you teaching someone how to do it than you doing it yourself. So, essentially, the class is yours. What we did previously was we identified a double top, right? And we identify where buyers and sellers were gaining strength, were losing strength, and what happened when they gain strength and they lose strength. What I want you to do is, with the current market that you have right there in front of you, right, is look at where buyers gained the most amount of strength and where sellers lost control.
Okay. So
All yours.
Okay, so right here, on this one right here, we see how with this, we have a lot of movement, selling, but at the same time, buyers are buying down here in this support area.
Correct, that's a support.
Right?
Yeah.
What else you want me to
Well, essentially, you understand that that is support, right? Mm-hmm. What would you say is the very next step when you understand support? What is the next step? What should we draw out next?
Find out where your resistance is going to be.
Correct.
Find out what?
The resistance level that you're going to target.
Oh, okay. So we got this one right here.
Correct.
Right.
So
and now trace it back a little bit more.
This one right here.
That resistance you just drew out, trace it back all the way.
All
the way
this
to the
one right
left.
here?
No, the bottom.
This one?
Yeah.
It's right here.
The reason you want to do that is because
see.
previously that was support, right?
It broke down.
It was previous, all the way in the left it was support, then it came down to hit as support again, to then the market go up, hit as resistance. So like I was saying, I'm just gonna re-say it all, right?
Yeah.
All the way to the left you have support, right? Then you have the double top, then the market comes down, and there is what right there, support. For the market to go up to previous resistance, because there was previous resistance if you draw that line all the way, correct, to then the market break down again, go up to what used to be support is now resistance, to then go down to support, to then go up and break the resistance. Right. So we understand our levels of supports and resistance. What I want you to do is get technical with this.
Right. Okay.
Where is there a double bottom?
Double bottom.
Yeah. That's not the previous one that we went over. And a double bottom is a W. A double top is an M.
So this?
Correct.
Yeah.
So draw it. Yes, but what I want you to do is from the top to the bottom, draw a W.
Okay.
Correct. So what is that? A double bottom.
Double bottom.
Right?
Yep.
If the double bottom was to not be completed all the way, we call that a partial.
Oh, okay.
Double bottom.
Double bottom. Okay.
A full double bottom is the
This is
previous
like
one that happened. You see where they sold off?
Right here?
More to the right there, up. That is a full double bottom. Make sense? There's the difference between full and partial. As a trader, which one is better?
The full.
The full.
Right.
But when you're trying to make money in the industry, or when you're trying to capture a move, which one should you settle with? If you're trying to capture the move, which one should you settle with? The full or the partial?
I mean, the full? No?
The partial.
Why the
Because-
partial?
sometimes you're not going to get the full move. And
So you have to like
yeah,
go with
you
the
have
one
to
that you
take
have.
what the market gives you.
my
know,
You have
on
to
any
take
given
it.
day.
Exactly. The market is not going to give you the full move every single time. It's going to give you a partial move. And that partial move could turn into something completely different. You get me? So,
Like one of my philosophies is always like, for example, partial moves are more likely to happen, right? This is kind of, I always treat it as the known and the unknown. And the full move is like that unknown range. So when I'm trading, I like to take it to what I know is the known.
So the partial is the one that is happening more, like
Exactly.
more consistently.
Well, because even in a full move, the partial has to happen.
Oh,
You know
okay.
what I mean?
Okay.
So to me, it's like if you trade the known, you're putting yourself with less exposure or like less risk. You're taking a more probable setup that's going to hit. And so like what I would want you to do next is kind of what he did when we were on the last example, is identify where the early buyers were, like where you can see the sellers lost control and the buyers got in.
Okay.
yeah. And
So-
something real important, which is something we're going to be talking about in our next classes, is he said, put yourself, you're good. Put yourself in a position of less exposure,
Okay.
right? If you were to draw a pie chart, do you know what a pie chart is?
No, I don't.
A pie chart is basically a circle. And if you divide it in half, right, it's 50-50. If you divide it into one triangle, it could be 15-85. That's a pie chart, right?
Okay.
Did you go to school?
Yes, but
Me neither. I didn't go to school. But
I was there, but my mentally wasn't there.
I mentally wasn't there.
Yeah.
I was skipping school every day. But that's what a pie chart is. And when we think about what he said, less exposure, I think about a pie chart. And the reason I say pie chart is because when we're teaching, we got to make it as simple as possible for people to understand. So if there is a pie chart, right? And in the pie chart, there is a 15% chance that you're going to win, but an 85% chance that you're going to lose. And you have the little thing spinning, right, to see where it lands. Where is it typically going to land? At the 85%.
The 85, yeah.
So with less risk, right, comes less exposure.
Okay.
You got me? You want to be exposed as little as possible. And that's why you're going to be going after partials in the market, essentially. If the partial comes through and you've already made money, what you could do is essentially hold off that trade because you have something called a stop loss that you could move to break even. And that's where the pie chart now becomes, from a 1585 to a 50-50. You get me?
Okay.
Why is it a 50-50?
Because you already. You don't have
Because
nothing
if the
to-
market goes down, you don't lose anything.
don't
But if
lose
the
anything.
market goes up, you win. You get me?
Yeah.
So yeah, what you're gonna do now is explain where buyers took ultimate control. What is the one candle that buyers took ultimate control in? It's the biggest candle with the biggest wick.
This one right here.
Correct.
Right.
Explain why.
Because, here for what I see now, I see like this big wick, this big push, and then, with this two right here,
Yeah.
I think it's like the like to know like it's going up again.
Yeah.
I mean, one really important thing you want to think about is obviously you're not watching this candle live.
Exactly.
But at one point, that was a really big level of support, which you see we stopped at for a couple days, and that candle was extremely bearish. Like it was all the way down. It looks like
Which one? This one?
no, the one.
This one?
Yes, that one. That candle was extremely bearish. It looks like the market was just going to continue to sell off,
To sell off. Yeah.
and then you can see. So you're at support. All the sellers are putting more money in, more money in, more money in, and they completely fail. So that's like where you can see the buyers clearly regaining
Taking control.
Yeah.
Okay.
Correct. So what I want you to do is erase it real quick and just draw out a support line right there in the bottom. So for multiple days, right, sellers have been trying to sell, but they can't. All right.
That doesn't mean. If you see like this, like boom, 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 and you see the break off, that's sometimes for like the new traders, they think it's going down because it broke a support area.
Yeah, and that's why it's like so important to
wait.
for candle
To
closure.
wait. Yeah.
Yeah. So the reason it's really important to wait for the candle closure. Damn, I don't want to stand up and explain it, but I'll actually, let me just explain it. I think it's very important to wait for candle closure. But you could stay right there, right? No worries. So let's look at this example right here, right? If you were to get into the market here, what makes you think that the market wouldn't just have pushed off?
I have to wait for this candle.
Exactly. There is a clear support right here,
Yep.
right? If you get into the market with this candle that's still moving, what is your confirmation that this candle was going to end down here and not above? You don't. It's hard to know. This is why this game is all about profitability, waiting, and establishing the correct game plan. That's why Ali said we wait for the candle to close. Because when the candle closes, it gives us more of a confirmation of where the next one's going to open. This candle closed right here in this area, right? And then where does the next one open? At the exact same area.
The same area. And then
So
pushes,
that's where you sell. Make sense?
Yeah. So you sell on this one right here when it opens.
Yeah.
You don't wait for like.
You sell there, but
that would technically be the confirmation.
yeah.
That's what.
But most people that are looking at this are going to say, well, why didn't you sell up here? Let's say that you missed this move, right? Your next following move is the move that you confirm after it breaks the support. But if you do not miss out on this move and you understand that there is resistance right here, resistance right here, you see the double bottom, you know that it was really strong, that the market's going to go up to elevate itself a little bit because sellers basically sold off. Buyers are going to take a little bit of strength back, and then sellers are going to continue to sell. Then you would sell right in this area. But if you missed out on that opportunity, you have to look for further opportunities.
But you don't think, like, if we enter here, like, let's say we're live right now, and we enter here exactly where it opened. Like, I think this is a lot of points, pips.
Yeah.
That if you don't wait.
This is the 1 day chart, right?
That's exactly, okay.
But, we're not trading on, when I trade, I don't trade on the 1 day chart.
Okay.
I trade on the 15, 30-minute chart. But if we were looking at the same thing, right? This is where the support's at, right here.
Yep.
Right? If I were to enter here, right, my stop loss is this. Very small. My take profit is everything else. So if we're using, I was saying, that's where my stop loss would be. So when I'm trading, right, if you could fucking press. Awesome. When I'm trading, right, my stop loss are typically very tight. Because what I've done, my trading strategy is if I lose 5 times, but I could win 1, I will make back what I lost. Why? Because I'm using the same lot size on every single position, understanding that it's not putting me at an area of margin called, and I'm still risking the exact same amount, but gaining the exact same amount. So that means if this stop loss is 20 points, right? And my trading plan for the day is I cannot lose more than 80 points. That means that I have 4 different positions that I could enter that day. If I lose on all of them, I have lost 80 points. If I lose 80 points, I'm done for the day. But that's 4 different entries that I have in the market while still being conscious about my risk management.
So let me ask you, so why do you trade like based on certain points lost versus a certain setup and basing your risk, your lot size based off that?
So why do I trade based off points? I don't trade based off points.
Oh, okay.
The points is the risk management aspect.
Yeah. Okay.
You get me?
Yeah.
The technicals is a whole different aspect.
No, risk. Like, do you use a fixed lot?
Yes.
What's your reasoning behind that? Is what I'm asking.
The reasoning is because I could lose 4 times, but win once and gain it all back.
Right, but my point is like, let's say you have a setup
But before that, I do calculations of if I lose 80 points, what am I going to end up losing for the whole day?
Yeah.
And then with that, I divide 80 into 3. I use a pie chart, for example. I divide 80 into 3, or I divide it into 2. If I divide it into 2 with US 30, that's 40 points, 40 points. So that means I have 2 opportunities where if I lose out on 80 points. And if I lose out on 80 points, that in my account will calculate 4%, 5%. Why 4 or 5% and not 1 or 2% like every fucking person says? Because I'm a aggressive trader.
Right.
I'm also someone who has money. So if I blow my account, which I have, right? It's not like it's the end of the world for me.
Right.
You get me?
It's not your make or break.
Exactly. That's why I advise everyone who trades to have multiple sources of income.
Right. I think it's so much easier to trade when you have money on the sidelines and you're not.
Exactly.
You don't need that money, because then in your trade, it's like, you know how you
get more
like,
emotional.
You know how you said you want to get the full move. People at that point want the full move because they're thinking of how much money they can make.
Yeah.
Versus, is the market giving me a partial or a full? So sometimes it'll be giving them a partial, but they're so blinded because they want to make more money that they're gonna try to force it to see the full, and then they're gonna lose.
Yeah. Another very important aspect, which I would like to close with this, but you did a very good job explaining everything, is that with partial moves, I have my full move.
Okay.
So I understand that with the partial move, I have my full move.
Oh, okay.
My full move is whatever I'm risking for the day. So if I'm risking 80 points, 75 points, the move that I want to catch is 75 points.
Okay.
Because I understand that if I lose 4 times and I lose 80 points, but I win on the 5th, I break even. But what happens, Lewis, here's another question I would typically get. What happens if you enter the market and from the first trade you make 40 points? Do you continue trading until you get to 80? No. I already made 40. I'm good for the day. The whole point of that is that I have an opportunity to enter the market 4 more times, right, in case I lose the first 3, the first 4. But essentially that is a little bit of how my risk management works. It's been working out quite well. Have I blown accounts with this? Yes. The reason I blew accounts is not because of the risk management, but it's because of the psychology, where I failed to be disciplined to the trading plan, where I would say 80, but then 80 will turn to 200.
Right. Yeah. And that's something I even want to kind of go over. Is like, you can see how simple trading can be, right?
Yep.
Like he just showed you, boom, and it's easy to identify. So a lot of people want to go, oh, I need to learn this and this and this and this and that. But the reality is the technicals, yes, extremely important, but it's like literally like 20% compared to the psychology. Like you can only learn so much, but the reason why 99 or 90% of the industry fails is because the psychology isn't there.
Yeah. Anything? Any questions?
No, I'm good.
I think you did a good job, man.
Okay.
Got it all.
Perfect. With that being said, we just concluded a Student Saturday. We look forward to seeing you guys on the very next one.